Breakfast Club. This is the late night London edition for the Breakfast Club. Those of you who are in Europe, we're going to catch you guys today. I have an early flight, so I'm going to try and catch some London action here, and I will set up the charts for you and we'll have a look. I'm going to be up for a couple of hours. I got to get out of here by 3 o'clock my time, so I've got 5 hours. But I'll be on here for 2. I'll try and get a couple hours sleep, and then I'm going to be heading out. So we're going to give you guys a London edition. See if we can find something to happen around 1 o'clock, 12 o'clock, 1 o'clock time. So that's where we're at. So welcome to the London edition. Those of you who are early risers, welcome. And let's see if we can't get some action here for the London folks, our European friends over there. Those poor guys have to be up or hang around till late in the evening to try and catch something at London session. So you guys will be up early this morning to catch something. So let's see if we can give you guys a break and see if we can find something for you folks. All right, I'm gonna make sure my speakers are turned off so I don't interrupt. There we go. Well, we got 3 people watching. Well, that's pretty good. That's more than I thought we'd have. All right, let's start from the daily, and let's look at this ginormous run here. See how we hit that premium array? Remember that little tiny skiff of a thing way up at the top there? We clipped that, and we have reversed and come all the way down into this large range here. We've skipped through this discount array down here, and we have run even deeper into the larger range. We've swept all the lows here, and we filled perfectly the discount, premium to discount, straight through, straight down, took everything out, cleaned up everything here, and now we're getting a kick off this low, which is on the hourly chart. We'll go to the hourly chart next, but I want you to take note because you'll see this is in yellow. We want to see a retracement now after we've hit this discount array. I'd like to see that bounce off of there, come back, find some support inside here, and start to move back inside this range. If we roll over and come back down, take out this low and come back into it. So if we close below this, come back into it, we're going to look for another extension, even lower still. We're going to be looking for, imagine way down here at 19,000. So you're looking at 2,000 handle plus drop in the markets. I know it's quite huge. I'd be looking for, next one is down here. Yeah, there's nothing else in there. So the next big ones are down here, all the way down to here. That's like 19,000. That's way back there. So we'll see if we can get a kickoff here and start to run back into this range that we've created since this week. If this was a TGIF Friday, let's look at TGIF Friday. So 1 all the way up to Monday, which is right here. That's Friday. Excuse me. So TGIF Friday would be something like this. Oops, wrong way. This is Monday, and this is Friday. We could see a retracement back into here. It's 904, 775 for upside. So that'd be like a little box. We could kind of put that in there as a retracement on if we took it right from the opening of the day. Like that was our ultimate low in our discount array. If that hit it and we get a response out of that and we close off the day in the bottom half here, and then Monday, Tuesday, we either continue going lower or we have a deeper retracement back into that range. So we're just kind of right now assuming that this is the bottom right now until proven otherwise. And as we go down to the lower time frames, you'll see that kind of transpiring. So hourly, we don't have any reversal in the hourly yet until we get back up above this level. So 651, we have to close above 651, and then eventually a break in market structure to the upside at 689 to want to go higher. So that's what you're looking for there. You go down to the 15 minute. 15 minute, we have a small little reversal happening here. Right here. So here's your 15 minute. And stretch it out. Lobo, good morning. Good morning or good evening. I keep saying good morning because that's my standard approach to everybody, isn't it? Good evening. Yeah, I'm doing a London edition today, so all my people that are down in Europe and stuff, you want to catch yourself grab yourself a coffee. We'll be here for a couple hours and see if we can't catch a market shift here. We're gonna kind of draw out all these other little expectations we have according to Michael. We'll start off with the open, and we're gonna mark the midnight open candle. We're gonna kind of mark these out as we go. So anyway, here's our discount array. See how we've traded above it? We've come back inside it, and we've started to get some lift. So now I'm looking for these candles here. If we can get above that on a close in the next 15 minutes or so, I'm looking for that to continue to the upside. And yeah, so I'm looking for upside from here, find support off of this candle, then break this high and this high, so we can start looking at those hourly break-in market structure. And if it reverses on us and comes back through this level on a close, I'm looking for another run back down into this range deeper. So that's kind of like what I'm looking at. That's 15 minutes. So let's look at a 5 minute. Just mark out all your boxes here. So we want to see this get above here. We just popped up above it now. So I'd like to see us find support inside this level and see if we can't get above this on a 5 minute level on a close. So you got to get above these highs on a close. Like a nice displacement candle here would be nice. We can get above that. I'd like to see some support in here, and then be looking for something upside. Get on top of here and support on that, and then see if we can use those. So these is kind of like the upside holes in the wall we're looking to climb up on to go higher. And And if we just bounce off this high here, I want to see if we get, I've got nothing here that tells me we want to swing it on a 5 minute. Let's look at a 1 minute chart. So right inside here. So let's mark out the midnight open candle. Which is right here. That'll be our midnight open. So we're digging back into this level here. There's a couple of little imbalances and stuff going on here. And we'll take from midnight there. Okay, we'll see how this acts in here because I'd like to see if we get some support inside that level. We've got an overlap here, so a breaker that took out this low, trade it back into that. We start getting some more lift from here. And what we're going to start to do is draw out this midnight. And we're going to go till 8 or till 12:30. And we're going to use this one. And we'll see how we act inside here. As you can see right now, between this low and that high, see where we go for the next few minutes. We've got till 12:30 here. I'd like to see something up here. We come back through here. Let's see if we can't get a return to the midnight open. So I'm going to kind of move this over a little bit. Just remember it starts from 12 o'clock. this candle here, and we take the range from the high to the low, not from this back here, but from the open, which is right here. Whatever the lowest candle is to the highest candle, wick included, for the first half hour. MF, that's an awkward time for you. Yes, it is a very awkward time for me. That's okay. I was promised a London session in, so that's what we're going to do. We're going to do a London 2 sessions today. One this morning for me and one for you guys. So I'm going to try and just go for a few hours and see what we can get. And yeah, let's see if we can get you something for London session. Just to give you an idea of what it is I'm looking for, let's just go back to these are way up here now. See how this is the 12 o'clock right here? This was the opening yesterday. Look at that huge range that we created there. So we're looking for, it looks very similar to the one we presently are using. It's open is way down here, and we've got like a large box that we've retraced up into, but nowhere near this kind of size. Anyway, so if you're looking for the next 2 hours or so, you're looking for a high or a low to occur between 2 and 3 o'clock in the morning. So here's 2 o'clock, pretty much flat. Then you get up into 2:30, and you get that 2:30 reversal, the bottom of the hour. And then Crazy Ivan return, and he sees you, he comes for you, right? Looking for this 3 o'clock now. You see this 319, 321, breaks a high. So you have a little structure break. You come back into that structure break, and then you start running for old highs up here. That's the 12 or the 2 till 3. So we're looking for a swing at 2 to 3 o'clock. If that makes sense. And I don't suspect I will have many people in the show today, but I appreciate all of you who have turned up. So that's kind of like what I'm looking for right now. So we're looking for 1 to 2 to reach for here. Still have a few more minutes so we could see this range, this open range, extend a little higher. So what you have to do is you also have to take the very first fair value gap that you see, which is right here, and we're going to call that you'll see that this area has a level of sensitivity. This fair value gap will be reached several times. So if we look at, again, let me go all the way back to the one last night. if we take our first fair value gap, which is right down here, right? So watch this. A level of sensitivity here. So look at how we hit off that first opening range. Super sensitive. And I don't know if we ever get back to that. No. So when we finally drove back through this level of sensitivity right here, see how it froze in that level? Came back into it and then continued going lower. I think this is one of the levels Michael got this morning. And if you look at what Michael was talking about this morning, we have a break in structure down here. We traced back through this. So for us, when we're looking at our rules for a long, that's a reversal for us. So the moment it trades back through it on a close, we're on the wrong side of this. You catch it short as it comes back into it, and now you can continue getting back in sync with the market. Michael took his short up in here somewhere. For us, we would have, I don't know what magic he knows back in here, but for us, if it breaks back through the downside of it, we're on the wrong side. Get back in sync with it. The moment it comes back into the range, you can get short. So you can take your long off here, and when you realize if you put your long on there, came back in and tagged it, and it dropped down, you go, I'm on the wrong side of this. It comes back in, you get a chance to take your trade off short, and then you get to go back long again, or sorry, long, you get to go back short again after this reversal. And then you can keep trading all the way down until you see a reversal pattern, which is right here. And as soon as the body trades above it, right here, you go, I'm on the wrong side of this now. It's a reverse. It trades back into it, and we continue going higher. And then when you see the next change in direction right here, you see a body trade below it. Right here, you go, I'm on the wrong side of this. We're coming back into this range, 50% or more. And pull your fib tool on that, you'll see. There's 50% right there, just shy of 62. So as soon as you see it trade below it right here, you go, comes back in, gives it a tap, runs to 50%. Then you wait for an opportunity to see it trade back through this level, or wait for yourself to see a body trade back through here. So this one here would have to go higher. This one here would have to confirm to go higher as soon as we close above that level, because there's no other imbalances in here except for there. Comes right up. Quick, quick, quick. You want to see it close back through that level. Is there one there? Nope. You see it close back through it on the downside close. Great. Uses this now to continue going lower, like we're looking for over here. If it trades back through it, comes into it, I'm looking for this to go lower. This one here, you wanted it to go higher, bounce off of here. It didn't. Instead, I'm going back down. So if we go down, come back into these, or into, and we don't close above the one that wants us to go higher, then you continue on the downside, take out the low, and then you wait for the next reversal. So pull your fib tool back in here. Sorry, that fib tool, because you're on that range still, and you're all the way down to 70% optimum trade entry reversal right here. So you're paying yourself accordingly on the way down. And then you wait for change in direction. Come back. Here's your change in direction here. Market structure shift. You take out that on a close. You don't get a chance to get back in on it. And it trades up through the high. Immediate rebalance right here in this candle. Trade back up inside it. Continue short. Pull your fib tool inside this range. And we start to trade lower. We have no low taken here. So this trade back up into here. No bodies really get above here. Continue trade back down and through it. On a close, you come back inside it, find support. The range extends lower. And you wait for the first reversal. Here's the next reversal here. Watch how the body trades through it right here. Now do we get an opportunity to get in on it here? Nope. Then we wait for this candle to get taken and these highs to get taken. So you have that candle there, takes the highs, takes that high, and that high. You come back, tap it. You go higher inside this range, and you're aiming for these little legs. Remember, we're pulling, like you're watching right now, we're pulling these little holes out of the walls that we want to climb on to go higher. So you wait for your first opportunity to see a reversal. And right in here. So this has created the high. We're right back inside this little wick here. Or this little imbalance. If I pull that all the way over here, make sure that's still lined up there. We come up into it. Watch this here. You trade below it. You don't get a chance to get back into this, and you're heading back down to this one here. Reach that one, you hit it, and now we're looking to see, do we close above that level there? Close above it, trade back into it, extend the range. Back into that little imbalance right here. See that? Drop below. See how no body gets below this reverse here? And then we continue to go higher. Look for this reverse here. We have a body trades below it. Now watch. We're coming back to old highs. You tap them, so your debate is whether or not this is going to continue coming lower, or you're using this to support price to go higher, aiming for this little imbalance sitting right here and these old highs. We come back all the way up inside this fair value gap here, just shy of consequent encroachment. And I'm just trying to see if there's a reverse in here. We can see it right here, this little imbalance. I look for these little tiny imbalances here. They're always in play. Always in play. Anytime you take out a high, you look for a little imbalance to form. And if that imbalance is traded below and back into it, you want to use that to leverage going lower. So that gets us into our big plummet around in the afternoon. This is the 1 o'clock, and we get into 2 o'clock. Right here. Your 1250 macro or 1150, no, sorry, 150 macro. We trade through it. Take out this low. You come back into that low and continue getting lower. And then you would have caught this monster ride down into this morning. And here we are. Oh, let me move this where we're at here. It says 1130. It's 1130 right here. So we get to drop this down one more little notch. Right there. That puts us right at 1130 or 1230. So that's our opening range. Fair value gap. Retracement back into it. Midnight. So there's our opening range. Yeah, we're live this late. Is there a TGIF Friday? I've already marked that out on the charts for TGIF Friday. If it is going to be a TGIF Friday, we're going to be looking up here. So that's what we're looking for today. if we can get up there. So you're looking at 300, 2 to 300 handles. If you're reaching up there, you're looking for 100 plus handles today, up to 2 to 300 handles we have for upside potential. If we feel it finish off in here, provided that doesn't make go any lower. If that's our daily discount box and we start to run higher, we're looking for that obviously upside TGIF. Usually you wait for those late in the afternoon. You look for them, not first thing in the morning in London. But stranger things have happened. So we have struck a change in direction. You didn't trade back into on this candle. So if this one takes out another one, this one, you trade back into this one and take it higher. So now I'm just looking for this to tap off of here and get some more extension on that. We have 5 minute. The 5 minute, you can see these, the first SIBI you see, it breaks through that and takes out this high here, and you come back into this last upward candle, or these two upward candles. That one there is buried inside these two. So look for these two here that make the breaker that takes out this low. We have a little swing here. You trade above it, come back in, claim the breaker, and run higher. And now we've got the last fair value gap up here with a new breaker, which is the parent breaker that takes out these ones and takes out that whole run. And you could say this is buried inside these as well. So I want to see if we can't get a little buy side run there now. So you want to see it get back above here. Remember, this is our first fair value gap for the open midnight range on the 1 minute chart. And I'm looking for, I have to change this one up now because that one's not going to be there. It's actually going to be right there. So I put us right into the rejection block right here. That'd be one standard deviation above here. And you're going to mark your 4 a.m. and your 4 a.m. open, your 6 a.m. candle, the whole candle at 6 a.m. And I won't be here for the 6 a.m. So you'll have to mark that yourselves. Onto a 1 minute chart. You'll see this last discount box here. You're still inside that. And now we're starting to pull out above here. Now you're back inside this range. So look for 50% of that range plus your premium. So this would be the premium box. You want to see if you can get up on top of this premium box to start climbing outside of this open range. So we'll see if we can climb on top of that. So this is in your the last part of the Asian range, London. Usually when you see a large Asian range, so Asia's high. Let me have a look at this here. Asia's high is 689. And we're looking for 679. So we're 10 handles shy of that of taking out the Asian range high. So we get up on top of that. Then we're looking for the next standard deviation, which would be 2 or half deviations, and see if we can wait and see if we see a change in direction in any of that. Otherwise, just let it run. Where do you folks all hail from here? Are you all from Europe? Or are you into what's right here? Right at the top of this one inside this range. So I want to see this climb out of here now. Start climbing back up on top of the larger one. It's good. A little retracement right back into this consequent encroachment is what I'm looking for here. From the EU. Excellent. So you guys are just waking up over there now. You guys usually get to your charts right away and look for your London high, low, picking out Asia, that kind of thing? This is good. We're above that level now. Yeah, sometimes look for that and to take out Asia and the reverse. So there's the change into this consequent encroachment I was looking for. Be nice to see that leave it open, but I think it's going to come down and give it a tap. I mostly trade New York with you. Oh, there you go. Well, thanks for staying up so late. Now it's my turn to stay up with you. So you see what I'm looking for is right here, right? So you're looking at this discount premium inside a small range here. You trade above it, you come back inside it for continuation. Inside the range, boxing is from here to here, right there. Then you want to see it trade back up above it, come back inside it, and then continue going higher, which is what we're looking for right here. Now, if it rolls over and comes back through that level, then I don't want to see it break this low. Otherwise, we're coming all the way back down and we're stuck inside this consolidation until we can break out of here. That's the consequent encroachment right there. I want to see it start going higher from here. That's what we want to see so far, you see. Once you identify the ranges and you look for these key levels, the support levels, you want to see if they provide support or resistance and see if you can continue to climb using those little holes in the walls that you got to pull out and identify them. See if you're going to climb up on top of them to go higher. So this is what these are. It's just I pull them out of the wall, I look at them and say, I need to reach for this level next, and I need to get some support off of that. This is kind of like if you break market structure, you want to see a market structure shift up here. But if we start to get up above this little swing point here, then you want to know if we can get back up above that and create a fair value gap. You don't want the whole thing to fill in. You want to see a portion of it stay open like this and then continue going higher. So you don't want to see it come back through that level there like this. I don't want to see that retap in that. You can come all the way back inside here. And if we break structure here, then we're also coming back to this. And if we break below that, we're going lower. So right now we're off this last candle. It's open. And this one hasn't even been validated yet. So you're looking at this guy here. So between these two candles is pretty much what we're banging off of here. And we've already hit the high. So really it's the next one, the next highest one over here. We'll see if this little guy holds and we'll go higher. Or if we pop through that, take this low, then we're coming back into this small little range here. So I like that. That's good. Carry on. So far we're still in sync, going higher. This kind of stuff, we're not used to seeing this in New York because it starts to move pretty quick in New York, usually at the open, right? So there's usually a lot of this waffling around going on in here in London. See how we're trading right through that? Right back into here, and we actually wicked through it. So I'm expecting this to take out this low now. Come back into that low. Small imbalance right here. Traded below it, right back to the very bottom of this retracement, all the way to the very bottom of that guy right there. So we said it could come all the way back there, and it certainly did. So now you want to see some real legs here. Get out of Dodge. I don't want to see it revisiting back below that level. Otherwise, we're looking for down here. It's bouncing off the opening range, consequent encroachment right here. That's what that is right there. Look for a run back all the way down to this little guy right here. This is just showing you that watch this touch here. I have to take into consideration this candle here too. But watch right here. Just bouncing off this one. Took the whole range there, from low to high. Look where you are already, below 50%. Taking out the low. You want to retrace back into this and this little imbalance right here, and then roll over and come back down again. If we trade back through that level on a close, then you're looking for range extension. So those are the two narratives. So let's see which one transpires. This one here, to roll over and come back down, or close above this level, use it for support to go higher. I'm gonna have to speed this up a bit and get down to a 15-second chart because these candles are, even a 1-minute candle seems too slow. I've never thought I'd ever say that. Back in the day, I always thought the 1-minute chart was just chaos. There was just no rhyme or reason to it. But now I look at it and go, oh, it's so slow. Come on. So you see how that second or the first narrative was, do we return into this level and then go lower? And that's what we're getting here. We're returning to the discount portion of this larger range. And now the question is, how do we act off of here? So if I was going to actually build that whole box out, I'd be looking for this. In those sticks right there. Guarantee I'm going to be yawning a few times here. So I apologize for that already. There it is. Bang. See how we just clipped it? Right on the money. So now hit the discount box. I want to see if we start running back through higher or whether or not we come through the bottom right there. So now you're looking for range extension if we close below here. Notice how we're banging off of that midnight open again. You got relative equal lows below you. So I'm looking to see if we can pop through here on a close in the next 20 seconds or so. Then looking for range extension. Well, you European people don't talk a lot, do you? There's not a lot of conversation going on over there. Mind you, there's only 7 of you in here, so you see how we traded below it? Looking for range extension now, looking for these lows to get taken. So even if you knew that that was a reversal here, and you said, oh good, as soon as we retrace into that, I'm getting a short on there, right from where I told you. So from here to here already is 15 handles, 16 handles already. And we're looking for a range extension now. Now all I want to see is once we pop below that, just come back inside this, give it a little kiss, and go lower. Like that. Right there. And then you want to see it come lower. Right inside those boxes. If it closes above it, then we're coming back inside this range. But that right there is all you want to see. Now you can come lower. Again, if we pop back through it, the other narrative is if we pop back through it and we close above it in the next minute, then we're coming back inside this range. And you're coming all the way up to 636 to 631. And welcome to consolidation. This is why I always tell you pay yourself at rejection blocks. So if you're going away down here, you pay yourself here, not at the low. Sometimes you don't get it and it turns back against you and runs after you. So the fact that we're even running, see how we've closed above it now? This whole bottom half, I'm not interested in that, those equal lows until we close below that line again. If you close below it, great. And it runs out the lows, even better. But the fact that we've traded above it tells me you want to come back further into that range. So it becomes a pivot point for higher or lower. So just watch. And because the candles are so small, we're not expecting anything major to happen here. But if it does, you're just looking to trade internal range liquidity. So there's your pivot to go higher. And you pull your fib tool from here to here. If that was your entry, not that it is, but if that's what you're looking for, and you know what you're looking for staying in price action, pull your fib tool from high to low. This is where you're hunting like 5-10 handles at a time. If that's your poison, look for the first 50% right here. As soon as it hits 50%, stop loss moves to break even plus the cost of your trade, and you take half your trade off. So you've made 7 handles on that as soon as it hits 50%. So just watch right there. Right there, just hit 50%. So you pay yourself a portion there, you move to break even, and it's a zero stress trade. That's it. That's how easy it is, man. Now you gotta remember, that's a 1 minute chart. That could be a daily chart. So the next one you're looking for is the 62%. And your stop loss would go from here to 50% if it hits 62. That's how you trade internal range of liquidity, quick and easy, protect yourself. You just got to know what your entrances are. If it stops there, rolls over and comes all the way through this again, you'll be glad you paid yourself, because you're on the wrong side of this. You paid yourself half your trades off here and you're break even already. So if it comes back against you, no worries, no stress. No need to worry. No need to get your knickers in a knot, right? Just disciplined enough to pull that fib tool every time. If this was an hourly chart, you would have made 2 hours worth of running. 1, 2, 3, 4 hours of upside. That could be quite huge. This is no different than a monthly chart. No different. You're just seeing it faster. So here's your 62% right there. So now your stop loss, let's say that was your entrance right there. Your stop loss will be sitting right at 62 because you just hit 70 right there. And oh, you didn't quite hit 70, so 60, you'd be sitting at 50% right here. And now you pay yourself another portion there. Comes back and takes you out at 50, you're done. Your trade's done, internal range liquidity hunt, and you're out now. Okay. So if that turns over you and comes all the way back down and takes out the lows now, we're all right with that. And you paid yourself that small portion all the way up to 62%. Didn't quite get 70. You got 62, got a portion off there, and the rest of your trade moved to here. So you got half off here, another 10% off there, and the last 30% got taken out here. So if this reverses now and comes down, you made, and again, I'm not saying you're actually going to trade that, but if you were, that's how you do it. So we'll put this back to where we had it before, which is right here. So you want to see it get back through here now. And in case you're wondering, we went from discount to premium again. Just above that last premium we had when we dropped below it. Trade below it, come back into it to get our short to this level. Wait for the reversal. It does reverse. It did not. We wanted to see it come lower, and it traded through it. You're like, okay, we're on the wrong side of it. It's going to go long now. It runs back into the range to the premium again, right at 62%. Now it's reversing again. We have a small little imbalance right here. Price ran above that level. And now we're back through this. So we're looking for potentially higher prices now if that closes there. I don't even like, even if that turns into a wick, that's not a good sign. So feels like it's going to go higher. Looking for maybe 636. Quiet bunch. Nobody's talking. Anybody got any questions on any of this stuff? Oh, wick did damage and we hold it, so now we're above this level. So yeah, I'd like to see that go higher now. No questions. All right. 9 people. Oh, we broke 2 digits. 10 people. Welcome, all 10 of you. I feel like I just got this nice little group of 10 people sitting in my office with me. Should have been in my pajamas. We had a slumber party. Everybody just hang out at Darren's place. We just read charts. Okay, so we're back down here now. So reverse your idea of going longer, going back shorter. I'm looking for another little pop below here. me get through this guy here. Let me just extend that out a little bit. DIY, do-it-yourself tools. So we're just looking for this to trade through here now. And not just bang off of it again. If it bangs off of it and starts going higher again, I want to see it get back through 624. See, it's just popped below it. So looking for a range extension now again. So we're back into that range extension. If we close in the next 46 seconds below that level, see how we're banging off this midnight open candle? We're tapping it. It's an area of sensitivity. You'll see it over and over and over again throughout the day. This midnight open is a very sensitive level. And the first fair value gap that you see after midnight is also a sensitive level. As you can see, we're hanging around in here quite a lot now. Still haven't traded a body below here yet, so we just come back, tap midnight. So now it's a super small range. These get really hard to call because you're not really calling inversions anymore. You're just calling individual candles. So we got another, how many seconds? See how we stop right in it? Like right in the consequent encroachment between those two. So it's literally hovering right in here. It's got to make up its mind where it goes. It's got to pop through here, or it's got to get it back up through the top of the fair value gap, first opening fair value gap. Oh, we're at 10, 2 people, too late for them. They're out of here. So see how we're just hanging right in there? Look for it to get above 625 on a close. So you're just looking for it to close above that 624. Literally opened on it. Here's a run back into here. Otherwise, you have to look for a little structure break up here and then use these highs for support to go higher. I can see why you like to trade New York with this MF. This can be quite painful to sit through. It's like being through London or the New York lunch. See how that level is a sensitive level? Stops on it, opens on it. A little tap in there is fine. Now you want to see that carry on higher. I'm looking for something to get above 636. Good. Let's find some support here. Look for 636. 636.25. There you go. Boo, yeah. There you go. Now I want to see it, or it'll pop back down here. I want to see this start to climb out of here now. Come back, find support off of our little level right here. And come all the way back down to 636 again. You might even come back inside this imbalance. I would like to see this stay open and see that just hit and go. If it's really bullish, it'll just stay there and just start leaving and just leave this whole section open for a little while later. If it's not, if it's just this whole consolidation crap here for a while, look for a run back into this old high here, 631. There's 636. We want to see it break out of this London open range. Look for the Asian range high was 689. This is your first standard deviation from the opening range. Well, certainly no rocket fuel here right now, is there? Yeah, I'm just looking for one standard deviation to here. And then you get another retracement all the way back into here for taking out these lows before New York. If New York has intentions of going lower today, we could see a slight little run up over Asia's range back into this consequent encroachment on the weekly. We could make it to the top of the daily inversion, which is what this is, and then reverse and come all the way back down again. And that would be, how many deviations would that be? Why it continues to do that? There we go. So there's 2, 2.5, almost 3 standard deviations if we get up there. We could retrace all the way back down into here. I want to see this stay open and keep going higher, but we're in a consolidation, so chances are we could be just rolling over here and coming back into 50% of this little range here, which is these old highs here. It's a good sign. Love the way the little counter just spins like crazy when one person leaves. It just spins, goes all the way down to 9 from 10. So just ran out liquidity here again. A little pop up. You want to see a full body candle get up here, start getting outside of this open range and climb up on top of it, find some support here and inside this little box we've got drawn out here, because these become important levels for me. As I've described to you before, they become important for rock climbing. If you're climbing the wall, that's the holes in the wall you're reaching for. We'll see if we can, now we're back down in there again. So, oh, retail loves a bull flag. We don't buy into the whole bull flag premise. But if it goes bullish, it's not because of the bull flag at all. We're looking for a logical level of support for that to continue going higher. If it flounders, look for 50% of this range here. So 50% will put us right in the middle of the consequent encroachment of that level. What puts us back into an immediate rebalance of this here. Not immediate, but a rebalance of that area. And this old high back here. I like that. Stay above that. If we get above this high again, then I'll switch over to a 15-second chart and see if we can't get something a little more interesting happening on a 15-second. Because 1 minute is getting really slow, and I can just imagine all 11 of you getting really bored really quickly. So we're going to switch to a 15-second chart. And look at the high speed action we got here. We'll get 4 times more candles than we did last time. so we can practice our price action study. So we have a low taken with a wick, reverse, body trades through it, you come back into it. Now you want to see this range extend higher, and you're right up inside this little one right here. So you want to see if we can pop through that, or if we trade back through this little imbalance here on a close, you're looking for range extension, which is pretty close, so you should expect it to go lower and through that. Then we're looking for that run back into that 50% of the range again here. So watch right there. Sensitive area or not? That's a 15-second chart. Come lower, take out that low, run back into that imbalance we talked about, which is 50% of the range right here. Look at that, just hold right up on it. Love it. Literally just stop dead on it. Goes higher. That's the same thing we're looking for on a 1 minute chart when we were down here. Remember, we wanted to see if it would line up inside those sticks. It hit nicely on a 1 minute chart and left. Same thing right here. Trades all the way back down into the sticks. And we've now climbed back up. So we got to get above this level here if you want to see this go higher. Otherwise, 15 seconds of boredom, back and forth, waiting for a higher low to get taken. See all the liquidity just building up here. We keep taking the high, come back down. So you want to see it sweep below here, 50%. Let's see if we can get back into that level. And usually we're on every morning for the New York open session. Usually start at 9 o'clock to 9:30 in the mornings. Sometimes it'll start at 8:30, just before the opening. And that's what you want to see now. Get above here. See how that level just held price? Break structure to the upside. Come back, find support at this. Start pushing higher. Reach for this high now. We want to see a range extension. So watch for that high to get taken. Or not. I guess I was wrong on that one. Just quickly swing through. When you get a candle like that, that runs straight for your stop loss. Now it finally takes it. Ah, that's funny. 1:30 in the morning. Still hasn't taken that low yet. There, it's popped through there now. 50% is right here. All right, big dive down in here now. Discount array on a 1 minute chart. We're just dipping into it down here. That'll be right. A couple more pips. I think it was down here. Where's that? At 22. Yeah, right on 22. Now see if this turns into a wick and heads straight back up again. If not, we start trading through a body through 22. I'm looking for this to take the low out here as well. That's one of those quick surges through. Would have taken your stop loss when you're looking for this range extension to go like that. You're looking for this candle to do what that one was doing. Quickly trades through and you go, I'm on the wrong side of this. It closes below, but you're already ran for your sell side. So if your stop loss was sitting below that low, you had one quick chance to take your profits here. And then it came back through you and took that out. Still no close below here yet. Anybody have any questions or anything yet? No? Yes? No? Small group. We have the top 10 traders here. Oh, top 9 traders here. Even at 15-second charts moving unbearably slow. So look for another run back up into here. You want to see it get back up into 634. You're kind of looking for a wait for the first or this 150 macro. It's going to occur right around here. So we'll see if we just get this waffling around here till 150. So 15-minute chart. See if we can get a little pop down into here at 609 to 601. It's above you. If you can dip back down into here, gather up all this liquidity below you here on a 15-minute chart, all the way to 601, and then start to run higher and take out this high here, and aim for Asia's high. Next, if we trade below 601, then we're going lower. 609. Again, you want to look for, let's go back to the 1 minute chart again. Oops, 15-minute there. Inside here. You don't want to see it trade above that. You want to see that just trade back into this and go lower. Looking for these ranges to extend. Now you've already extended that range and that range with this wick. So if you start to pull back through that level, going higher. And we are. Wait for a body to close there. Back inside it, looking to go higher now. Challenging to try and do this late at night for me. To stay in price action is, that's a heck of a challenge. See if we can come back down to that 605. Wicks did some damage, got you to 50% of that range. Now you gotta wait for a high or a low to get taken, otherwise you're just gonna get beat up inside here. I'll go for this macro to the 120, 150 to 210 macro. Let's see if we can't get that a swing. And if nothing happens by then, I'm going to call her quits. We'll shut her down for the night. I'd like to see a little swing come down here. Take out that into this low here. Just tap this BISI. And then get a nice little reaction off of there. And that we're looking for at the next 8 minutes or so. Pretty dead here. Just wait for this last macro and we'll shut her down if it's I get nothing off this next macro. Trying to get a couple hours sleep before I gotta go. Right now it's heavy. Feels heavy to me. It doesn't feel like it's gonna have a major run higher just yet. We'd have to get a close above 625 on the close. We'd have to break here. This feels like it wants to come lower. This level is 609. 610. 608. Eight to 600. A lot of video games this morning. There you go. There's 608. 605. That puts us right below that low. Right back into this box. We're about to start the next macro. Now I want to see if we can start climbing up, take those highs out. So if we have another little couple of little digs down here, I'd like to see a fair value gap form down here, trade up into it, and then start going long through here. So got a couple more minutes to make another macro or a SIBI, or you can take it off right away. I'd like to see a macro form first. This could be the BISI. I'm okay with a BISI on this side. We can tap this here and go. We get a BISI forming in here, which is what we're looking for now. And then the macro shall begin. If we come back in, touch this, then you can go higher in there. So there's your spooling of your macro right now. So if we come back in and tap this, anywhere inside here for a long. Like that right there. Stop loss goes just below that level right there. I don't want to see this mean threshold give way, otherwise we're coming back lower again. We are. Well, it didn't give us what we wanted. You want to see a body get above here now. Running down to that 600 level. This might be the SIBI we were asking for over here. So if we see a SIBI form in here, it's got to take out that low though. Look for 600 down here. Waiting for their, there you go, there's 600. Now see if we act here, if we close below that. You could see around all the way down to, if we close below that, look for a 589. right here. What do we got here? $5.89. Okay, 589. Right there. So the fact that we're eating into that through that consequent encroachment now, we'll see where that thing closes up, but that's already dipping into a deep run into here. If this was bullish, you'd want to see it tap that and leave. Last line in the sand is a quick aggressive thing off of the consequent encroachment of the BISI, which is this candle's open, and then leave. See how we're just eating through it? So you're spooling macros right here. It ran through it on the downside. Oops. Put that back. Close below it. You don't even get a chance to tap it and go. So you're just closing right around that SIBI of consequent encroachment. Let's see if we get a reversal here. So see return back into here, and I'd like to see that close above there and start reaching for this premium array above us here. You can get a closed candle above here. I'm looking for here. So you don't want to see it revisit 589 now. You want to see it just start to spool up, take that out, and not start coming back down into here. This feels like it could just turn around and just start augering down, not running back up. We'll see. Watch this level right here. You'd have to start with this one. $2 o'clock. So watch right here, see if we can get some support off this level. You don't want to see it trade back through there. You want to see it tap this and go. If you don't get that, I want to see it leave from there now. Look for this premium array above you here. We've wicked down into this little piece right here. Watch right there. No reason for the rest of that. Yeah, this feels like it's going to come lower. Traded through this back into it, looking like that's going to come lower now. Look for a continuation to fill that fair value up. I don't think we're going higher. I think we're coming lower. We just traded through it, into it here again. Look for 576. If we're back above this again, then you're back to going higher again. Looking back for that premium array again. Not that we're above here. That's the problem. You got the linchpin area right here. You trade above it, going higher. Trade below it, going lower. Above it again, going higher. Still inside this range. Watch up here. Watch right there. Bang. There's your premium array done. You can still go through this and go much higher. Trade all the way up to the top of it here. You got to get through that on a close now if you want to start aiming for a higher one. And now I'd be aiming for something like this in here. So that looks like the 2 o'clock swing. So I'd be looking for more upside now. This can hold. Look for those old highs to get taken out. If it trades back through here again, you're looking for lower prices. And this was just a run back up to a premium before going lower. I think that's going to be it for me. Sorry, it wasn't too exciting for you guys, but look for this level again. If we trade through it, look for a lower price. And if we can get back up above this level here, look for a run higher. And eventually you're reaching for the Asian range high again. But if this rolls over here now and continues coming lower through this level, and you see you already through it already. So look for lower prices now. All right, that's it for me. Thanks for tuning in. Sorry, there's only 10 of you here. Couldn't give you too much action there. But hopefully you can see there's some pretty good accuracy there still. There's key levels you have to be looking at. You have to be willing to allow yourself some wiggle room here when you trade below it, then above it, then below it. You got to be prepared to say, I want to see a market structure break above or below structure now for a continuation on the downside. Otherwise, you can get beat up in these change of directions if you're using the inversion as your pivot point, which is what I use. So you can get beat up a lot in there if you're just using that pivot point. Every time you go over it, to now go short, go over it, now go long, wait for a structure break. Just if it takes you out once, wait for the structure break on either side before you re-enter into the market again. But other than that, thanks for tuning in. I will see you guys maybe tomorrow afternoon or this afternoon. It's 12 o'clock in the evening here. So I may see you this afternoon. Depends when my flight lands and we can get set up again. If not, I will see you guys on Monday. And then Tuesday I fly back here. So there might be a little delay in the Tuesday session. Oh no, because it's not to the afternoon, so I'll still be doing Monday, Tuesday session, and I'll see you guys on Monday if I don't see you later on this afternoon. Again, thanks for tuning in, and I will see you guys later.